Oliver, one of the strange things post-financial crisis is that the auditors, the very people that have looked through companies and bank books and financials, didn't really get much of a rap post-crisis. But they're coming into focus a little bit more now. The Competition Commission is looking at ways to improve the way they work and relate to shareholders and companies. What are they suggesting?
Well, the Competition Commission has looked through the market. They say it's not working at all well for shareholders. They say that the difficulty, more or less, is that auditors seem to work more closely with the management than they do with the shareholders, when actually they should be working for the shareholders. So they've proposed various remedies to improve this. One of the ideas is mandatory rotation, or they would have to change, companies would have to change auditors every so often, or at least put it out to tender every so often. Another is that there should be more engagement directly with shareholders. Another thing they've looked at is whether loan agreements should have clauses in them saying that the auditor of the borrower must be a Big Four company. So all kinds of remedies to try and get a bit more movement in the market.
And it's strange, isn't it? Because on the one hand, the principal agent problem is meant to be solved by the board. The board is the shareholders' representative in the company. They sign off on the accounts. Why doesn't it just operate in that way, do you think? Why isn't that good enough?
This is what the Big Four accounting firms are saying in response to today's Competition Commission announcement. They say we do this through the audit committee. The auditors have very close contact with the audit committee. They speak every month, if not more often, and that's the primary sort of interface with the shareholders. It's through the audit committee, and they say the Competition Commission hasn't taken enough account of the work that audit committees do.
And if they were doing a bad job, why wouldn't new entrants be winning share, for example?
Well, the argument is that it's very difficult because there's a certain cachet that goes with having a Big Four auditor, and if you're a second-tier firm like Grant Thornton or BDO in the UK, it's very difficult to start winning those, and if you don't win some of them, then it's very difficult to win others. You can't demonstrate a track record of having audited half a dozen FTSE 100 firms, so if you're outside that sort of tent, it's very hard to get in.
And it's interesting that if you sort of look back on the last 20 years, and it's rare that I hear that shareholders are upset by the auditing process. You could argue that the market should just solve this problem. If the auditors obviously make mistakes, that will come out into the public domain, and markets would solve the issue. Why hasn't that happened?
Well, it's a very interesting question. I think maybe one of the reasons is apathy, that shareholders, for all that they might say, they're not very happy with how the market operates. They don't actively go and get rid of auditors. It's very rare you hear of shareholders trying to fire an auditor, and it's sort of newsworthy when an auditor does change. So perhaps one of the things is that it should be more down to the shareholders. If they're not happy with the situation, they should intervene more to try to change it, rather than having these sort of regulatory sort of restrictions on rotation. It's just down to the shareholders to say, actually, we're not happy.
Well, I mean, all four of them seem very similar to me. It's hard to imagine how rotation is going to solve much, and they've certainly been entrenched for a long time, so it's hard to imagine anything changing soon. Thank you very much for that update, Oliver.